morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets made modest gains on open today after signs of progress on trade negotiations and speculation of government stimulus to shore up economic growth. In a telephonic conversation with US President Donald Trump, Prime Minister Narendra Modi objected to Pakistan's extreme rhetoric against India, said the incitement of anti-India violence was not conducive to peace. A government-appointed task force submits its report on the new Direct Tax Code, which seeks to replace the existing Income Tax Act. The Indian rupee tumbled 28 paise to close at the lowest level in over 6 months at 71.43 against the US dollar. The yield on the 10-year benchmark government bond closed at 6.6% or just under that. And the world's largest solar EPC player, Sterling and Wilson Solar, is all set to list on the bourses today. The company's IPO was subscribed 85%. Let's talk about the US markets now. Stocks climbed after the Trump administration signaled progress on trade negotiations, and speculation grew that major central banks will shore up their economies. The dollar rose to this year's high. Ranita Young of Bloomberg News gets you the key highlights from that session on Wall Street in this report.
U.S. markets ended higher on Monday, with the S&P 500 closing a third straight session in the green, all happening as U.S. President Donald Trump signals that trade negotiations with China are moving along, and that sparked a little bit more buying into markets. It also happened as speculation grows that major central banks will continue to shore up their own economies. We did see quite a few movers here, with PG&E sinking close to 30% after a judge ruled that a jury will determine whether or not the company will pay as much as $18 billion in damages to victims of wildfires. And we're still in the middle of corporate earnings season, with Estee Lauder, one of the best performers during the session, rising high after it beat analyst estimates. Coming up for corporate earnings on Tuesday will be Home Depot, Lowe's, as well as Madison Square Garden. Meanwhile, Treasury slumped and gold also slumped. No surprise there, since it was a risk on sentiment during the session. And we saw crude oil rallying after a drone attack in a Saudi Arabian oil field. And that's a look at your Monday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's close the loop and also take a look at how the Asian markets are faring this morning. Sophie Kamruddin is joining us live from the Bloomberg studios in Hong Kong. Good morning, Sophie. How are we looking this morning?
Well, this morning, Asian stocks are trading mixed, with the regional index modestly higher for a third straight session, while the U.S. dollar is holding near 2019 highs. Treasury yields are giving back some gains, and the Japanese yen is clawing back some of the overnight declines. Now, here in Hong Kong, stocks are set to snap a 4-day gain, with the Hang Seng close to forming a death cross formation, and Morgan Stanley is cautioning investors to take a defensive positioning on Hong Kong equities after trimming its GDP growth forecast for the city to sub-zero levels. And in China, the Shanghai Composite is headed for the first decline in 5 sessions. And in a milestone for the PBOC, we are getting the central bank's first fixing for its new reference rate, which will underpin the price of new loans to businesses on the mainland. So the 1-year LPR, the loan prime rate, that is being set at 4.25% for August, lower than the previous rate of 4.31% when it comes to the benchmark that was previously used by the PBOC. Back to you.
Thanks so much for that, Sophie. All right, let's take you through a recent update of the protests that are happening in Hong Kong following the arduous protests that have now entered their 11th week or weekend. There have been reports of several Chinese Twitter and Facebook accounts that have been found. And China is allegedly waging a social media campaign to undermine the Hong Kong protests. Twitter found and deleted hundreds of accounts that it said Beijing used to undermine the pro-democracy movement and calls for political change. And Facebook, acting on a tip from Twitter, also found and eliminated similar content. Stephen Engel of Bloomberg News reports with the latest from Hong Kong.
Yeah, I mean, when I first read this story, I have to be honest, maybe I've been around a little bit too long. It didn't surprise me that this kind of perception management, if you want to use that euphemism, going on. It's going on everywhere, actually, in social media. So you have to kind of always take a lot of this stuff with a grain of salt and kind of figure out where it probably came from. But what's interesting is how Twitter and Facebook are taking action, and also the breadth and size and scope of this alleged campaign coming from state-backed entities, if you want to call them that. Twitter found and deleted 936 accounts that they say originated in China that attempted to manipulate perspectives on the protest movement here in Hong Kong. Facebook, then acting on a tip from Twitter, said it found a similar Chinese government-backed operation on its social network that included 5 fake accounts, 7 pages, and 3 different groups. Now, Twitter, in a statement, said, based on our intensive investigations, we have reliable evidence that this is a coordinated state-backed operation. And it went on to say that deliberately attempting to sow political discord in Hong Kong, including undermining the legitimate and political positions of the protest movement on the ground. Now, analysts that Bloomberg News has spoken to say the size of this operation potentially could be greater than Russia's alleged disinformation campaign that it waged, again, allegedly, on the 2016 U.S. presidential campaign. I might add that in a related announcement, Twitter said it will stop accepting advertising from state-backed media worldwide after finding that Chinese propaganda messages from Chinese-run media was paid to promote, in fact, taxpayer-funded or independently run media such as the BBC.
We'll keep you posted on all the updates that emerge from Hong Kong. For now, let's take you through the rest of the headlines that are making, or rather, rest of the news that's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
Start with President Trump. He has resumed his assault on the Fed, calling for a full percentage point rate cut and complaining that the strong dollar is hurting other economies. The president tweeted that the key rate should come down by at least 100 basis points, along with some additional easing. The Fed cut rates last month for the first time in a decade, and some policymakers are not convinced of the need for more.
Forecasters still expect we're going to get reasonable growth over the second half of the year. Yes, bond rates are low, but I think it's reflective of the global conditions, and global conditions are weak. So I'm not saying there aren't circumstances in which I would be willing to ease. I just want to see evidence that we are actually going into something that's more of a slowdown. If I'm growing at 2%, I'm not as worried about that.
The number of people, meanwhile, migrating from Hong Kong to Taiwan is surging as protests continue with no end in sight. It's up by almost a third this year compared to last, with Hong Kongers making up to 10% of all new residents in Taiwan. President Tsai Ing-wen has been vocal in her support for Hong Kong's protest movement. There are more demonstrations to come after a peaceful mass march over the weekend. And Bloomberg Economics has been crunching the numbers on the trade war and says the growing uncertainty could lower world GDP by 0.6% in 2021, compared to a scenario where there is no trade war. That would be double the direct impact of the tariffs themselves and knock the equivalent of $585 billion off the IMF's estimated global GDP of $97 trillion in 2 years' time. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, well, let's, with that, turn back to India. And let's, in fact, talk about the rupee, which for the last couple of days has been under a little bit of pressure. In yesterday's session, it tumbled as much as 28 paise to close at an over 6-month low of 71.43 against the US dollar. And now the yield on the 10-year benchmark has also been in focus, and it not too long back, remember, had hit a low of 6.25%. It closed yesterday at just under 6.6%. Now, this is all as worries grow about the ongoing slowdown in the Indian economy. The newest reading for growth in the first quarter of this financial year, which will come out at the end of the month, is going to be very keenly watched, therefore. And what hasn't helped matters, and I'm sure Agam will talk about this in his trade setup, is the fact that foreign institutional investors have been net sellers in the equity market since the second week of June, apart from a couple of days when there has been net buying. So on that note, let me go straight to Agam Vakil, who's here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, good morning. How are we looking today?
Well, good morning, Alex. Tentative once again. We have seen marginal moves coming in for the SGX Nifty, and that should be on your screen, marginally lower. For now, not too much movement, so we're very likely to see a flattish opening for now, considering so much uncertainty globally. But for now, we really didn't see too much as far as the Nifty is concerned either. Yesterday, we did see a lot of gains, but a lot of these gains were given up in the last hour of trade, and well, that has eventually resulted into not too much in terms of the broader markets either. The banking industry is also, in fact, showing a lot more weakness, so it's gone the other way around for them. But as far as your other ADRs are concerned, Tata Motors is under pressure. Do remember that we do have a care rating downgrade on this one, so we may very well have that impact coming through in our markets too for Tata Motors. And say for Infosys, we're actually seeing some amount of losses for a lot of these ADRs. As far as fund flows are concerned, back into the negative territory as far as FIIs go. This time a net sell figure of 306 crores. DIs on the other hand buying stock worth 386 crores. And of course, contributors wise, we have gains in Reliance Industries, ICICI Bank, HDFC being cancelled out by losses in HDFC Bank, SBI and ITC. Now, as far as your futures and options are concerned, we're starting to look at some amount of unwinding because there is a lot of uncertainty. And do remember that sharp drop in the last 1 hour of trade did certainly change a few things coming through. The Nifty banking futures as well, we're looking at an unwinding of around 7%. And moving on, we do have open interest distribution at the same mark, around the 11,000 put. And on the higher end, well, we're still trying to figure out the level, but it is anywhere between 11,100 and 11,300. In terms of writing, again, it was a mixed year of trade, a confusing one considering the drop. But the India Volatility Index, that moved up by as much as just 1%, nearly once again inching towards the mark of 17. The Nifty put-call ratio, again around about the mark of 1.2. And well, the demand housing finance continues to remain in the F&O band. And IDBI Bank is a new entrant in the F&O band, but with a sharp up move of around 12%. Mahanagar Gas is in focus as one of the investors are looking to sell shares in the company. Biocon has been under pressure at a 52-week low, in fact, a lot of shorts coming in through. And CESC, on the other hand, looking at longs in terms of stocks which are seeing unwinding. There isn't as much momentum, but for some, there is PVR, Kajaria Ceramics, and Balkrishna Industries. All of them, in fact, looking at a little bit of a short covering coming through. So we keep an eye on that one, Alex, and I reckon it'll be another mixed year of trade coming through today as well.
Thanks so much for that, Agam. All right, let's turn to the primary market. The world's largest solar EPC player is all set to list on the bourses today. Sterling and Wilson Solar's IPO was subscribed 92%. There are a couple of key questions, though. Will the company witness stronger demand in the secondary market, and what is the likely valuation? Yash Upadhyay is standing by to tell us. Yash, good morning, and over to you.
Morning, Alex. So the IPO price, or the price band for the IPO, has been fixed at around 775 to 780 for Sterling and Wilson IPO. The total offer size is about 3,125 crores. It's a pure play offer for sale when the promoters, which is the Shahpurji Pawanji Group and the chairman Khurshid Daruwala, they would be selling their stake in the company. And due to the market volatility and the kind of scenario that was in the market situation, it received a tepid response, only managing to scrape through the minimum requirement of 90% subscription. So it has received about 92% demand at the upper end. But keeping that in mind, the most important thing to watch out for is the listing scenario. Should it manage to list at the IPO price of 780, the market cap would stand at about 12,508 crore rupees with a price to earning multiple of 19.6 times. But it is highly likely, which is what most of the market experts are also citing, that it would list at a discount. And And in that case, if it were to list at a discount of close to about 730 rupees, the market cap would come down to 11,706 crores, and the price to earnings multiple too will come down to 18.3 times. And on the other hand, this is how it would stack up in terms of valuations if it were to list at a premium at around 830. Having said that, let's also try and understand what does the company actually do and what is its business. So it is, like you rightly mentioned, a pure play end-to-end solar EPC solutions provider. It's the largest player globally and also provides operations and maintenance services. Its current order book that stands at around 3,831 crores, and it's a fairly diverse order book. It got almost 100% of its orders from India as early as FY16, but now it has operations across 65 countries. It has also received letter of intent for orders worth additional 3,900 crores, so fairly robust when it comes to their order books. In terms of financials as well, its revenues over FY16 to FY19, they have grown at a compounded annual growth rate of almost 44%, with a 50% jump in its EBITDA, margins too healthy around 6.5%, and net profit growth of almost 72% compounded annually over the last 4 years. The return ratios too have been very favorable. Its return on equity stands at almost 76%, with a return on capital employed at 121%, and a return on asset of almost 12.4%.
Thanks so much for that, Yash. Well, we'll keep you posted, of course, as to how the listing takes place on the bourses today. For now, let's talk about stocks that are already listed and that are in the news. Mishika Parak is joining in to tell you all about the stocks in news. Good morning, Mishika. What's on your list today?
Good morning, Alex. First on my list is Tata Motors. Care Ratings have downgraded its long-term rating to AA- from AA and have changed outlook from stable to negative. Then we have Vodafone Idea. CEO Balesh Sharma steps down as the company CEO with immediate effect due to personal reasons. Ravinder Thakur is appointed as MD and CEO for a period of 3 years. HFCL has received purchase orders worth 2,467 crore rupees from BSNL for Defence Communication Network. Then let's have a look at some important defaults. DHFL is defaulted in payment of non-commercial debentures and commercial papers worth 1,571 crores, which were due on August 19th. IL&FS Transportation Network is defaulted on payment of non-convertible debentures interest worth 4.74 crores, which was also due on August 19th. Nestlé's launched its cocoa malt beverage Milo, manufactured in Singapore and tailored for Indian consumers. Nestlé withdrew Milo from India several years ago as it did not meet action standards. Now, India is amongst the largest malted food drink markets with a market size of 8,000 crore rupees. Investec says that Nestlé's launch of Milo is negative for Zydus Wellness and HUL.
All right, thanks so much for that, Mishika. Now, you've probably heard this. If bees go extinct, we're looking at a major environmental catastrophe. So there should be a little bit of concern when there is news that 50 crore bees dropped dead in Brazil so far this year. Here's why. All right, let's talk about some of the stories you'll find on the website bloombergquint.com if you take a look this morning. Prime Minister Narendra Modi had a half-hour conversation on the phone with US President Donald Trump, during which he made an indirect reference to Pakistan Prime Minister Imran Khan's recent rhetoric against India and said that such incitement to anti-India violence was not conducive to peace. That's according to a statement from the Prime Minister's office. The two leaders also discussed bilateral issues. And a government-appointed task force headed by Central Board of Direct Taxes member Akhilesh Ranjan on Monday submitted its report on the new Direct Tax Code, which seeks to replace the existing Income Tax Act. The details of that report, however, could not be immediately known. That's all you need to know going to trade today. Do stay tuned. There's a lot to talk about, and that will come up in just a short while. This is Bloomberg Quint.